Welcome to the weekly pivot for August 3rd, 2025. So this week, let's just review the last few weeks of the weekly pivot. We'll talk about macro from last week. There was a ton of stuff that went on, so it'd be good to discuss that, some of the big picture stuff. We'll talk about upcoming events for this week. It's kind of a light week. We can go through SPX seasonality, and we can, of course, talk about some charts. So over the last few weeks, we've had some nice movement on SPX. Episode 1, we talked about a dip to 6,200, 6,150 before pushing higher into the end of the month, and we got that dip. Episode 2, we talked about a move to 6,350, 6,400 by end of July, which we got. And then the last episode, which of course I missed all the fun this week, but we talked about going slightly higher to finish that swing Golden Gate. Swing Golden Gate didn't complete, it was short by about 3 points, but we got to 64.27-ish. And then I also mentioned we might be able to get to 6,500 if there's strength in the market. That didn't happen, so that was a miss. And then we talked about no rate cut in July, and then of course mean reversion happening soon, which happened in a very spectacular fashion last week. So really, really good so far. Good start to this episodic series, and I hope you guys are enjoying it. And I'm going to continue to work on this on a weekly basis, and I hope it helps you. So let's talk a little bit about macro. So there was a surprise GDP print of about 3%, and just digging deeper into the data, it looks like that was due to a decrease in imports. A lot of front loading in the prior quarter for goods, and then in anticipation of tariffs. So we'll see how that impacts. Just a note on that. If we look at the trajectory for GDP analyzed, assuming even 3.0 prints for the next 2 quarters, which would be significant, it's likely going to be a lower overall GDP for the year relative to 2024. No change in interest rates as we expected. We should see 1 cut by the end of the year and maybe 2. Right now, the rate probabilities for September have shot up to the 80%. Powell talked about it. Nothing's changed on his front, still focused on data and lagging effects of tariffs on inflation. And of course, we saw the PCE print higher than expected year over year. Month was higher, met expectations, but it was higher month over month. The big thing, though, last week was the jobs data, NFP. So it was kind of a weak expectation for July, and it couldn't meet it, 73K versus 106K. But the bigger issue was the 256K revision. So job revision down May, June is not a good sign, especially with all of the stuff that we've been talking about sort of sitting in the background that could create economic pressure. Of course, that could lead to rate cuts, but if the rate cuts are happening because of economic pressure, that's generally not a good thing. You usually want to see rate cuts because of normalization of inflation in a good economy, not because there could be potentially slowing economy. So it's something we got to keep our eye on. I don't really buy too much into macro stuff. I trade charts, but it's important to kind of just understand what's going on in the background. Of course, we've got tariff deadlines looming large in August. We've got, I think there was a revision of the 8.1 deadline to 8.7 just to help with compliance. And then, of course, we've got China, which is the big one, the 90-day extension, which is coming up in 2 weeks. So important things on the horizon to watch on the tariff front. Not a lot going on this week in events. Nothing really I need to highlight for you. I think the bond auctions might be kind of useful. The 10-year note on Wednesday, the 30-year note on Thursday. Otherwise, it's kind of like the normal stuff that we see on a typical first week of the month. So let's talk about SPX seasonality. If you remember, we talked about July being bullish. And of course, we ended up with a bullish July. It was up 2% before, of course, falling apart on the first day of the month, this month, almost retracing most of the July gains in just a couple days. We're heading into kind of like choppier waters is what I would call it. We were getting the mean reversion that we were looking for last week, which is great. And I think that can set up things for kind of the end of the year. But generally speaking, August and September can be a mixed bag. Obviously last year was a slightly different scenario because we had a big drop in July from the carry trade, Japan carry trade stuff. But, generally we see kind of a mixed bag in August, and I expect that to be kind of the case. So there could be, a bigger retracement, and we'll talk about that in a second, and then maybe a push back up. We'll see what happens. And then, September tends to be kind of a more bearish month. We've had big bearish months in the past. Of course, this was during, the bear market. All right, so here I've got side-by-side charts. On the left side, I've got a daily chart with the long-term ATR levels, and on the right side, I've got a clean chart with a clean weekly chart. Let's actually start with the weekly. So I've got marked the prior all-time high, where we declined earlier in the year and we kind of came back. I still would like that to be back-tested. I think that's generally a good thing for markets to do, and it's pretty typical. And so I think, we'll probably get a pullback into this weekly ribbon somewhere between 6,200 and 6,100 for sure, with, 6,150 marking kind of the middle. That's what I'm looking for. We do have the weekly dot, and sometimes when you get these weekly dots kind of right into the distribution zone, it's not as big of a move. It can be just a pullback to the weekly 13 or even the weekly 21, but generally it's kind of a weaker pullback. So we'll see if that actually materializes in a weaker pullback, or if there's something more systemic here that we need to worry about. But, even a pullback to the weekly 21, I don't think that would be terrible if we get that down to 6,000. That would resolve some gaps that we have, which we can talk about in the left chart in a second. But keep that prior all-time high as a level to watch on your charts. Moving to the left side, we still have this IHS that we've been talking about for a while. That's takes us to 6,500, and 6,500 is roughly the plus one ATR on the year. I still think we'll hit it by the end of the year. I think we'll get up there. Obviously there's the macro stuff, and the seasonality has shifted. So we're going to get a pullback, which we've already started the last couple days of trading. We closed below the daily 21 for the first time since April. So that's significant. Definitely some weakness, big volume. It's not on this chart because it's SPX, but big volume on Friday. So here's the all-time high, 61.47. Can pull back to that. We've got gaps below. I think everybody and their mother is looking for this gap, so that makes it harder to get to. But if we get back there, I would look for some support there. Tons of demand right here. We played this flag before earlier in the year. So tons of demand here down to 6,000. Of course, that's roughly the weekly 21. So, pullback to close this gap would coincide with a weekly 21 mean reversion. I think that is definitely going to be a viable dip if it holds. So that would be really, really, really significant value if we can get it. But I'm going to be watching for this pullback to the daily 48 and the 61, 47, 43 level. We got divergence on the daily. We got a pretty strong momentum move, and we're back in compression on the daily. So if we do end up holding here and consolidating, it could set up another move for us, another big move. And we can talk about that as that materializes. So that's kind of what I'm looking at the big picture. Let's zoom in a little bit. Now on the right side, I've got quarterly levels, position levels. So these are the quarterly levels for the July, August to September quarter. And then on the left-hand side, I've got the same chart that we've been looking at for a while, which is the 4-hour chart, daily ribbon, and swing levels. And I've got our same levels marked that we were just looking at in the other chart. And you can see we almost made it to close that swing golden gate before we got the mean reversion on the daily. Now 6,200 has been an important level. That was a prior monthly pivot. That's a really important level for us to watch, and it also is marked by our swing golden gate to the downside for this month. So just below that, we've got 61.50-ish. Prior all-time high, and then you can see the gap is just below. Full monthly range, minus one ATR takes us down to around 6,000. So again, there's a lot of things that are lining up. That being said, the 4-hour PO is kind of at the bottom of the range, so it can definitely go lower. We've even seen it go into extremes, so I think that gives us some continuation opportunity for the downside still in weakness. It can always do something like this where it bounces back up and continues lower. But I'm expecting to go and test this all-time high. I think that seems like a reasonable level, at least at minimum, for us to go test. And then looking at the right side, you can see we do have a position Golden Gate open against that, lines up with 65.5408. So 6,500, that area. So if we do get a big pullback and then continuation, and into the end of the quarter, it is possible that we can go back up to 6,500. But right now we are pulling back, and I think that's really healthy. And that's your weekly pivot for August 3rd, 2025. See you in the next one.